Hi folks, this is Hyman, and I wanted to talk to you today about what I have termed the RSI Double Bottom strategy. And of course, recently I've shared with you in a video about and I did this in an article as well, about how to get a better response out of the RSI, especially in a stronger trending market. And you can take a RSI down from the traditional 14 look back period down to something like a 6. And you will get more oversold and overbought readings within your RSI. So I've got it on that setting, so I want you to keep that in mind. But the RSI double bottom is simply, it's just like a W on the chart. Anytime you would see a double bottom in a price pattern, you would see a huge move up, and the same thing happens, in my opinion, in RSI. And so and this is for, I want to preface, this is for short-term trading, even though it's on a daily chart. For instance, here's an example of one. The RSI comes down, comes back up, comes back down to roughly the same area and forms a W and comes back out of oversold. When it does that, you come back up here and you see on the second leg of the W is the big pop. So the second time it goes oversold and pretty much forms a double bottom, you see that. Here's another one. Comes down, back up, down at roughly the same level, comes back out of oversold. What happens on the second leg of the W and the RSI? A big pop happens after that. See if there's any more. Here's another one. This is a little more sloppy, but here's one leg, comes up, here's another leg, and then you see a pop, stagnation, and a real boost afterwards. Here's another one right here, comes down, comes back up, comes back down to practically the same level, comes back up. So here's your second leg of the W, and it comes back up. This was on euro dollar on the daily chart, but this would function this way with a lot of pairs. I'll switch to a yen pair, say euro yen, and show you the same thing. Here's one. Comes down, bottoms up, comes down and bottoms, and right in here is where you get your nice pop. Here, let's see. This is one right in here. Comes down, up, down, a little. Like I say, if the second leg is slightly higher, slightly lower, doesn't really matter, or if it's right directly even, we'd still call it a double bottom. So right in here is where it double bottoms and starts coming up, and right in here is where you start having your pops. So some of them will be immediately on that same day or next day. Some of them might take a few days before they start responding because you are on the daily time frame. And I would encourage you, as soon as they start to pop, even a good 30-40 pips, to make sure you've moved your stop to at least break even. So because some of them will be short-term pops and some of them will be quite sizable pops, with 100, 200 plus pips on them. So be sure to take that in mind. So okay, we looked at euro dollar, euro yen. Let's see. I'm just happen to be picking on euro pairs, but you can do this with any pairs. Here's your double bottom, comes down, comes back up, down again. And here's your second leg, pops up, comes back, and then does another big pop. So it was real simple because you're just simply looking for W's on a chart. It comes down, up, down. So here's the second leg of the W, pops over the upcoming days. Here's another one, comes down, up, comes back down. You buy in here, and it pops. So some of them will keep it going. That's why you can move your stop up, because some of them will keep it going for the next 5, 10, 15 days, and you'll get this really long, several hundred pip run out of it. And others, will be a pop of, 40, 50 pips, and you're done, and it'll happen over the course of a day or two. So, just know that some of these will reap more than others. Also know that with any strategy, there's no way 100% of them work out. But my point is everyone that we showed you out of all these pairs happened to be a winner. So there's going to be more winners than losers. And so if you manage your losers right by stop loss management and by keeping your number of lots reasonable on each and every trade, and keeping that consistent, then you'll do well over time. So RSI Double Bottom strategy, where you're just looking for a W on the RSI. Again, this was a RSI 6 period. So when you pull up your RSI, it'll usually be defaulted with 14 in it. Some of them will default to 9, most of them default to 14. You just want to erase that out of there and put 6 and click OK, and then it'll put this this RSI on your screen. And so it's just quicker responsive, because RSI traditionally sometimes does not have a lot of instances where it'll go all the way into oversold or overbought, and that just forces it to where you see that happen more often. And so you're looking for a double bottom or a W shape in your RSI. As soon as it hits the double bottom and comes back up out of the oversold, that's when you want to hop on the position. And many times you'll see it ride for 3, 4, 5 days at least after that. But you want to have your stops moved up past break even at a good 40 or 50 pip mark, because some of them will be that day or 1 or 2 day type of run, and that's it, while others will be 3, 4, 5, 10 day runs. And so there will be some of them, if you manage your stops right and give it enough room to move up, and occasionally just move your stop up, I mean, you can hit a multi-hundred pip several hundred pip run over the course of 5 or 10 or 15 days and do quite well. So check out and start looking for RSI pardon me, check out the RSI Double Bottom on your pairs. And thanks so much for watching. If you'd like to find out more about what I do, click on the link below this video. Thank you. Bye-bye.